Hey traders, happy Monday. Welcome to Charts and Coffee. We're taking a look at the broader averages here 30 minutes before the bell. And look at that, another higher high. Okay, so this is getting a little redundant, but it's all good. If by looking at the long side of what's happening right now, if by focusing on where the strength is, relative outperformers, strong stocks and strong sectors, if that's been your focus, because you've been watching this show for about 3 years, then we are in really good footing. We continue to have nothing but long call positions in the Sector Secrets Mastery because A, it's not our job to pick tops, and B, it only makes you famous. It doesn't necessarily scale to something that works. But, I was thinking about this morning. Why do traders want to do that? And I saw this tweet from Koyfin. I love Koyfin charts, and I give them a lot of credit for posting this. And it was this, and I don't know if the joke is lost, but I think it's brilliant. The tweet reads like this: Michael Burry. So this is the guy from The Big Short, right? That made the big trade, right? One of three guys they highlighted in the movie. Michael Burry has successfully predicted 30 of the last 2 recessions. But one time he nailed his market call. I don't agree with this so perfectly, because if you'll remember, it took a while before the market turned back down. His fund was down 27%, I believe, at one point. So one time he nailed the market so perfectly, he cemented himself into stock market history. So if you are that player in Game 7 who hits a home run, it's a big deal, right? You might help the team win. But at the end of the day, does that mean that throughout the season, you were a productive member of the team? Some people might say that's their job. And you know what? Everybody has to decide if this is what you want to do or not. There's an old saying that a broken clock is right twice a day. And unfortunately, that's what most analysis is anymore. Let's pick a top. Let's pick a top till we're finally right. Let's talk about a recession. Let's discuss the crash. Right? Until we're right. And then recency bias works. That is all people remember. And I just want you to stand guard at the gate of your mind, because these biases hurt us as retail traders. And ultimately, it's on our job to argue whether or not the Federal Reserve is doing the right thing. It's on our job to talk about whether they're good at what they do or whether who's in the White House matters. It's our job just to look at the pitch that the market throws us and determine if it's in our zone, and then we take a swing. That's it. And, the longer I'm at this game, it's really, and I'm just going to say it, it makes perfect sense why most retail traders lose. It just makes perfect sense. Right? They want to talk about the Federal Reserve and whether or not they're doing a good or bad job. They want to talk about whether or not inflation's going up or down, when in reality, we just want to find stocks like Cisco and then determine if we want to hold Cisco for 1 week, 1 day, 1 year, a lifetime, right? That's the job. And I just continue to see the discussion where people turn on television and think that's what trading is. No, gang, that's what being on television is. Right? Trading is finding a trend, buying the dip, and then determining at what point in that dip you can control the risk. And then at what point in the follow through, you want to proactively take a reward. That's it. Right? And it just really is, I don't know if it's comical. It actually makes me sad now. It actually just really makes me sad that at this point in the year, folks are still saying the Federal Reserve doesn't know what they're doing. Are the markets poised for a big pullback? As if anybody knows. Are the markets going to crash? Again, as if anybody knows. And what they've successfully now done is left one of the strongest trends we've seen in years. It's over now, gang. And you know what? I was looking at this book here, and maybe we should start saying, it's called The Power of Regret, right? I'm going to have a really inspirational talk this morning. If at this point you haven't grown your account, and you're not looking at the trends and buying them, it's over. You might have one more window dressing moment, but that's it. It's over. Let that sink in. And then the next time someone wants to be a Michael Burry, calling a top, or wants to put out some clickbait commentary about how this is the beginning of the end, remember the lost opportunities of 2024. That's where we are now, gang. There's going to be some nice window dressing. That's about it. This has been what we've seen this year. And so maybe a little bit of, oh gosh, maybe I need to tune that out, was then the lesson for 2024. Because it's still very much, when's the big pullback coming? Aren't we too high? Gang, we are at, I don't know, 15th all-time high in the S&P. NASDAQ's at another all-time high. And folks are still wondering if we're going to crash, if there's going to be a giant pullback. And if there is, lengthen the time frame, know your wish list for those stocks that you would have loved to have bought at a lower price because you believe in the thesis, not in the momentum, right? Case in point, what was the most egregious example of that? Oh my gosh, China, China, China. How many people jumped into this because some hedge fund guy went on television? People confused that with an act of charity or a public service announcement and chased it higher. When do you think people go on television to talk their positions? After they've already built them, right? And so the game continues. This is where we are. So ultimately, if we can take a look at what's happened this year, remember that the Federal Reserve is continuing to cut rates, whether or not you agree with it, right? That's not our job. Pretty sure none of us are voting members of the FOMC. So we're going to focus on the long side. We'll wait for a dip. And then at some point, from time to time, that dip won't hold. But if we play the probabilities of every, say, 10 trades, say 6 to 7 of them will follow through, which is pretty much my win rate, I'm going to lose 3 or 4 times. But as long as I focus on the high probability setups and follow through, when the dust settles and I look back at a month or a quarter or a year, I say, gosh, yep, I did the right thing. I focused on the long side because that's where the trend was. All right. So yeah, maybe it's time to start using a little bit of the power of regret. I'm going to read this again and say, you know what? Did I phone 2024 in? Did I listen to folks who were telling me that we were going to crash? I shan't listen to them anymore, right? Because they cost me money, right? It's just that simple. All right, so let's get to some of the questions here. All right, good morning, good morning. All right, Patrick says, I'm looking for a short-term trade on low. Thank you for the time frame. So Patrick, a short-term for me would be a 5-minute, maybe a 1-hour time frame. That's where I would set that up. The 1 hour, to your point, has a nice trend. Buy the dip. What's the dip going to be? The daily price movement range or the mean reversion sitting around 266. It depends on how you want to go about it. If you prefer a mean reversion, which is usually a deeper pullback, that would be the place to be. If not, I'll follow the volatility, which is beautifully stair-stepping. So that's what a short-term swing would be. Otherwise, then I would put it in the day trading category and make it a today trade. All right. So what I would want to do here, it's going to be opening up at what, 271. I need it a lot lower. I mean, a lot lower for the mean reversion. And at the bell, I'll get the daily price movement range, which will probably be roughly a little higher than it is right now. I wouldn't be surprised if that DPMR kicks in around 268, maybe 268 and a half. So I need that pullback. And then this would map to, so let's be even more specific. Short-term swings map to about a 1 to 3 day time horizon. Could they be more than 3 days? Sure. But very often I'm going to hit my first target within that 1 to 3 day window. All right. So ultimately, something like Lowe's, and I agree, I would focus on the short term. I wouldn't focus on the long-term swing or multi-week follow through because ITB has had a really tough time gaining some footing in this current environment where we're really not sure what it is December, January, and March may bring via the Fed fund rates. So I like the idea of the short term, Patrick. I think that's a great idea. Let's focus on that shorter term trend, which is indeed intact. I can see my green multi-structure down in here, green grab candles or top tier, whichever one you might be using. It's a good look. And I would focus on Home Depot. That's a really good look as well. All right, let's go back into some of our indices here. I'll keep an eye out for the questions. And again, if you're finding yourself struggling to figure out what to trade, you're just kind of bouncing from whatever, headline to headline or whatever trend might be going on. We want to be classic. right? We want to be classic. What is classic? What are the stocks that are weighted heavily within the indices? What are the sectors that are weighted heavily within the indices? And the cool thing about that is you won't have to scan across hundreds and hundreds, if not thousands of names, the vast majority of which are not important to the broader averages. They're not meaningfully weighted. Therefore, they can kind of go off and do their own things. They're probably unfamiliar. They're probably oftentimes very low in open interest. And they end up really diluting the focus and the effectiveness of just finding things that are heavily weighted and have alignment from index to sector to stock, right? And the cool thing is you end up with a really nice, tight group, maybe 3 or 4 dozen names that you know really well. You know you have open interest, and you're not scanning for the unfamiliar. Instead, you're trading the familiar. And that's the way I like to do it. So if you're struggling with that process, or if you're still saying, Rag, I was waiting for some big crash, or Rag, I didn't get long all week, all year long, forget week, come check out what we're doing in the Sector Secrets Mastery. It's a classic, right? We're not doing whatever the popular thing is at the moment. I don't give a rip anymore about things like SMCI. I'm not on the, oh my gosh, NVIDIA is going to the moon bit. We just, whatever the bandwagon is, can we focus on things? Although I take that back. I do like NVIDIA within the SMH right now. But can we take a much more objective look at what we're trading and focus on what has follow through, not what's in the headlines or being talked about, heaven forbid, on television, right? So, ultimately, if we can just remove our feelings from it, right? Exactly, Brian. We can remove our feelings from the process and just trade what we see, not what we think. We're going to be in really, really good shape. All right, so let's go take a peek at, again, the indices. The main issue that I'm going to continue to focus on with the Dow is to what degree can the Dow continue to benefit from the strength in financials, from the strength in transports and industrials and even tech, because XLK is heavily weighted within the Dow. And how much longer can it shake off the sort of laggy nature of what's been going on with XLE and the straight up bearishness that we've seen in healthcare? Can the Dow keep pace with the S&P? Probably not, but it is absolutely punching up to a higher high. So let's focus on that, remembering there are going to be particular pieces of the Dow that might be outperforming. Case in point, I think it's important to talk our book, and that is, and talking the book is not a bad thing. Talking a book is, I can tell you I'm bullish, or I could show you I'm bullish. We're long IYT, right? So this isn't something I'm analyzing. This is something we're in, which I think means a whole lot more, in my opinion, means a whole lot more than analysis, right? A lot of folks analyze things that they have no intention of being in or aren't even in now, right? But sort of give the illusion to, oh yeah, we're in this. No, open positions. What's this, raspberry? All right, we got the blueberry smoothie and the way. All right. So this is the blueberry smoothie today. I know my Sector Secrets folks know. And then actually this new thing that I've been getting is an organic apple blended into some raw whey. All right. My mom does that for me every morning. I know. What a spoiled child I am. Okay. So let's see what else we've got here. JP Morgan, JPM. Sure. Let's get to it. All right. So JPM is one of the names that I would focus on to the long side. Let's open up the XLF and talk about what we do and don't like, what's performing and underperforming. And if we take a look at JP Morgan, and this is the XLF, by the way, I know this symbol is covered by the clock, but this is the XLF ETF. And I would avoid Berkshire still. I would avoid Chubb for sure. The best looking names are the ones that either have a trend, and you can see there's more and more within the financials that have the trend. JP Morgan, Visa, Bank of America, Wells Fargo, which we have a position in, Goldman, American Express, Morgan, right? So that immediately takes a group of, in this case, 11 stocks. These are the top 11 weighted names in financials and reduces it down to, okay, these are where the trends are. If I want a trend that's heavily weighted within the XLF, that's going to put me firmly in the camp of JP Morgan and Visa. If I'm not as concerned about high concentration weighting, although I still want influential stocks, Bank of America, Wells Fargo. And you might say, Rod, why would we maybe think about the weighting? If you want something that's going to track a lot like the sector itself, XLF, the heavily weighted stocks are going to be the most in sync with that. So regardless, though, is JP Morgan on the list? Absolutely. So then if we take a look at what we want to do, JP Morgan, like a lot of names, we had a lot of volatility Thursday, Wednesday, Thursday, Friday of last week. Although Friday was pretty quiet. So the concern that gap up on Wednesday morning was then going to be closed. Gang, there's way too much made of gaps. I mean, of all the things we can and should look at, don't make gaps a primary consideration. The idea that they close is true. The idea that they close immediately is not, right? So keep in mind that a gap can just go, a gap can hold. And until we start to get down through, say, 234, I'm really not concerned about the influence of closing the gap. But it is interesting that we basically printed on JP Morgan the outside. This is right just outside the election, right? The first day that we could respond to it with an open market. There's your large up candle, inside candle the day after, inside candle the day after that. So not a lot of selling pressure, but not a lot of buying support either. Traders are looking for that next reason to be bullish. And it's not as if the election isn't going to continue to offer some support, but what's going to be the reason for traders to buy at new highs? And that will likely be a combination of two things. A Federal Reserve that's still committed to cutting rates on December 18 and window dressing, because we're coming into window dressing season. What are those stocks that based on relative performance, recent relative performance, will be bought into the end of the year? That's window dressing. That's recency bias. These are all things that tend to happen. So I'll wait for JP Morgan to trade down into the daily price movement range. And then Ren, I will look for long calls. But I wouldn't limit it to JPM. I would look at all those trending names, right, within the group. And in this case, Ren, unlike Home Depot and Lowe's, which was that great question from Patrick earlier, Ren, I would focus on the longer term. I would be okay with having a time horizon of a minimum of 2 to 10 days. I would focus potentially on the December 20 options, and I'd look for more follow through for a longer period of time based on the daily time frame for an entry. All right. Next up is, do I think ASML is a good buy for the long term? Well, again, long term could be viewed two ways. Long term could be perhaps a daily time frame or a weekly time frame, and I would say no to both. Right now, I would say no to both. It's not a no, not ever. It's just a no, not now for me, and it's two reasons. One, there's a lot of heaviness here. Two, I need to look at the group that ASML would trade with and see if there's a relative outperformer. But right now, that would just be a no. Just for now. We'll see if anything changes, but I would not right now. All right, gang, as always, thank you so much for being here for Charts and Coffee. I'll see you tomorrow. Be good to each other.